Saving money can be hard, and borrowing money can also prove to be difficult as well. It can be difficult to keep track of the total amount of money on your own or need to return from a debt or loan. Thankfully, there is a type of building which provides these services for you. Banks are where you save money. There are many types of banks for certain purposes. The first type of bank is the central bank. In the central bank, they set out policies for the whole banking sector. They regulate the operations of all banks in the country. The stability of the financial system in the country depends on its policies. The next type of bank is the commercial bank. These are what the central bank operates. This type of bank will be the main place of where you will save and borrow money. They accept deposits like saving deposits, time deposits, and demand deposits. They give out loans to businesses as seed money to start operations or to expand operations. And they may also provide car loans or housing loans. As you can see, to be able to save money, you can approach a bank near you and request to one of the tellers to deposit or ask if any loans are available.
There also exists thrift banks that are smaller banks that also accept deposit and provide limited loans to people. The first type are savings and loan associations. These are small savings groups whose members band together and save. The fund pooled together can be used to lend to whoever needs loans. The interest earned is given back to the members in the form of dividend. The next are savings and mortgage banks. They accept mortgages from the public in exchange of loans. Interest earned from these loans are the income of the bank and can also be used to lend to others. Rural bank help farmers gain access to credit or loans. They also accept deposits from the public, including non-farmers, and they also lend to cooperatives and businesses in the rural areas. Finally, there are trust companies which manage the wealth and assets of those who have no capacity to do so. Like the children or minors, they also manage the wealth of charitable institutions or churches.
Another thing to take note of when saving or borrowing money is the current interest rates. To discuss what interest rate is, we have to identify what the term principal is. The principal is the amount of money that the borrowers need to borrow. Knowing this, the interest rate is the percentage of the principal to cover inflation and to make some profit. What this basically means is that when you borrow money from a bank, the bank needs to make a profit from you borrowing money, so they add a certain percentage of what you borrowed in order to make some profit. When there is a low interest rate, we will find it easier to pay back loans, so then we can borrow more and more. When there is a high interest rate though, it will be harder to pay back the loan, so we spend less. The interest rate differs from bank to bank, so some banks will require you to pay more and some will require you to pay less. Knowing all these things about interest rates and banks, our main goal is to always save money and borrow wisely in order to manage our money properly. Thanks for watching.